Let's start our conversation today as Nigeria is no doubt conducted with merits of challenges as limited capital has made the government resorted to foreign debt in order to augment domestic savings. Balance payments of deficit as shortfall in revenue continues to rise. Despite the recent positive rally in the global oil market, government revenue has not yielded substantial growth as external reserves continues to deplete. According to the latest report by the Central Bank of Nigeria, the country's external reserves lost $180 million in 2 weeks as the reserves, which stood at $33.28 billion on July 1st, dropped to $33.09 billion as of July 12th, before gaining slightly to rise to $3.1 billion. That's the $3.1 billion on July 15th. This has been the trend over the past few months as severe pressure has been mounting on Nigeria's foreign reserves despite the increase in crude oil price. However, in a bid to contain rising inflation, which has sustained a downward trend in 3 consecutive months, and to also cushion the impact of the drop in FX supply on the Nigerian economy, the monetary and fiscal authorities have taken extraordinary measures to meet these extraordinary challenges. But the measure seems not to be yielding much results as macroeconomic challenges facing the country's economy are yet to be addressed. To discuss this and, of course, all other issues surrounding Nigeria's economy this time, I have joining me via Skype from Abuja is a partner and chief economist at PricewaterhouseCoopers, Dr. Andrew Nevin. It's good to have you join us on the show, Dr. Nevin, and happy Salah to you.
Happy Salah, Tola. It's great to be here, as always, and great to be at Abuja.
Yeah, Nigeria's dwindling reserves has been a major concern over the years, of course, as this remains the economic cushion. Now, with supply disruption globally, how much of an investment and action plan do you expect at state and national levels to spur production and value addition in areas of comparative advantages and earning more foreign exchange? What would you just say is depleting our reserves?
Well, I think the situation is that there's lots of amazing work going on around the country at the federal level, also at the state level, to attract investment. Just from the viewpoint of kind of our balance of payments, capital account, current account, what we need at the present time to drive diversification is we need some inward investment to stabilize the Naira. And then, of course, that inward investment is made either to displace imports or to export. So over time, then our current account balance also improves. So that's the basic theory of it. Unfortunately, we're not attracting enough investment. And I mean, a lot of people, as I said, many states, for example, they are trying really hard, but because of COVID and because we still have some kind of barriers and ease of doing business and some issues around our reputation around the world, we're not quite getting the investment yet. But certainly the efforts of NIPC, for example, I think have been fantastic. The Office of the Vice President and, of course, His Excellency the Vice President themselves, he had a session this week, I guess a week ago now, last Tuesday, with the Bureau of Public Enterprises, sort of starting to lay out the assets that we could have investment, of course, investment from Nigerians, but also investment from outsiders. So, I mean, there's been, as I said, a lot of progress on this. We quite haven't hit the point where we're going to shore up our reserves, but I'm actually confident in the medium term.
But there seems to be no fresh tactics in government's revenue strategy. Hence, we tow a line of borrowing. Of course, both domestic and foreign debts are very high. With the issues around forex scarcity are still a bane for local manufacturers, how do we begin to change the narrative? I spoke to a manufacturer yesterday, and I can go on and on with all of the complaints. How can we change this narrative to help, expand and, ease this manufacturing base, which is largely dependent on import of raw materials?
Well, I mean, I think so much of manufacturing, for example, beer, there's some import of raw materials, some import of obviously the machine was originally imported, parts, spare parts, and some services now imported. The problem with the government strategy at the moment, quite frankly, is that when they can't import some of the things they need, the entire production line stops. So all the value addition, all the raw materials that come from with Nigeria, all the people employed in Nigeria also become unemployed. So, I mean, I think we've reached the point where there really is no choice but to have a unified exchange rate. And a business that may be expensive to import goods, they'll always look for a way to use domestic inputs if they can, but where they're forced still to use foreign imports, they at least know that they're available at a certain price. So this regime of having multiple exchange rates, 3 or 4 different exchange rates, we've discussed for a long time having a unified exchange rate. I think the evidence has shown us that there really is no way forward without fixing that and allowing the importer, if they have the economic means at the price, to import. And of course, the Economic Recovery and Growth Plan said we were going to move to a unified exchange rate. The central bank and the central bank governor, of course, taken steps there, but we haven't quite made the final steps. So it's still very frustrating as a manufacturer or someone trying to conduct business where some of your inputs have to be imported, but a lot of your inputs could be from Nigeria. So as I said, we're losing all that value added right now.
Excessive dependence on oil for revenue is something that everyone is talking about. Even the last MPC meeting, some of the members of the committee talked about this, and they used the word foreign exchange sustenance on oil or oil proceeds is no longer sustainable in medium to long term. What's the quick way out? What do we do at this time, practically?
Well, I mean, one thing we do, and we wrote the paper on it, of course, is we cherish the diaspora. They are holding up the economy. The remittances are hugely important. It touches millions of people in this country to get those remittances. Of course, as the Naira slides, in Naira terms, the remittances go up, and people in the diaspora are even more willing to send money. So there's a bit of a counterbalance to the depreciation. So that's the first thing. I mean, the second instance, I mean, as I said, we need to make it attractive for people to want to invest in Nigeria. The distortion about the currency is one big issue. We still have some remaining issues on kind of ease of doing business, as I said. But when people want to invest, what you're going to have is a situation where that inflow of investment becomes our foreign exchange that we can use to stabilize the Naira. And in fact, if we were actually attracting the investment, we should. I think the problem would be the other way around. People find it hard to believe, but the Naira would rise too fast, and that's a different problem. But Egypt went through this about 5 years ago now. They had multiple exchange rates. They finally took the decision to have a single exchange rate. And they then got massive investment in there, and their economy picked up. And I think we need to go through the same process here on that. I mean, oil. I mean, there's a number of problems with oil. One of them is Nigeria does not have that much oil, so we only produce 1.4 million barrels in May. Of course, we use 400,000 barrels or more ourselves, and we use more than we should because of the foil subsidy. This is then shipped to other countries around West Africa, so maybe that could be reduced a little bit. But we're only talking about 1 million barrels of oil net for Nigeria, and of course, the cost of lifting it, the cost that goes to the IOC, it's not that big. The reason it's such a big part of government revenue, of course, is government revenue is so small. So because of the pressure on the fiscal situation, of course, the government's very focused on trying to increase revenue. But our position has been very clear for a number of years. There is no way out of the current situation by just trying to squeeze Nigerians harder and harder, right? So when we have low growth, and we had it before COVID, we obviously had the recession during COVID, though we were relatively robust. But Nigerians continue to get poorer and poorer per capita. And in that environment, it's very hard to extract more taxes on that. So our basic point is, and the debt itself, I mean, it looks large relative to the expenditure of the government. It looks, the amount of, obviously, that we spend on interest looks very large to what we collect. But those problems, the only solution to those challenges is for the economy to get bigger. And then you'd find that it would just drop away. People wouldn't be worried about the debt. But if we continue to only grow 1 or 2% a year, we're going to continue to be in the same situation. We need to grow 6 to 8% a year. And if we did that, of course, the government would be able to extract more tax revenue because it was a growing economy. They'd probably be able to grow a revenue 10 to 12% a year. But where we continue to have this low growth, we're in a very difficult situation.
Indeed, it's scary when we're growing at about 3%, and GDP is like about 0.5%, or where were we at the last check. But moving on, diversification of the economy, which is also very key, is something that we should talk about, Dr. Nevin. And coupled with the fact that we prepare for the global shift from fossil fuel to green energy. So are we not supposed supposed to think that very soon, like you said, we don't have much of that oil. I think we have more of gas even than oil, and we're yet to take advantage of that. Don't you see this as a threat from even proceeds that we get from crude?
Well, to begin with, just on the economy, I mean, the reality is that the Nigerian economy is already widely diversified. So, for example, the ICT industry is about 14% of GDP. Agriculture, I still think, is somewhere in the mid-20s or high 20s. The cultural industry, so that includes Nollywood, includes fashion, it includes music, is 8%, and oil is 9%. So people telling me it's an oil economy, if your cultural activities, cultural economy is 8% and oil is 9%. It's just hard to say it's an oil economy. So Nigerians have diversified the economy and will continue to. I mean, the issue is we're having trouble exporting some of the diversification. And why are we having that problem? One reason we're having the problem, of course, is the infrastructure and the ports and the electricity. Is actually, we've been saying it's quite difficult, even with AFCFTA, to see Nigeria exporting physical goods in the medium term, short to medium term. It will happen eventually, but not in the short to medium term. So how do we diversify our export earnings? We've got the diaspora, we've got the oil as the two major earners, we've got a little bit of agricultural export. What we've said is the country should focus on exporting services. Why is that? One is the services are very high value added. The two is because the services don't rely on the port infrastructure, the customs infrastructure, the roads, the electricity on it. And it's already happening. So we have an incredible company, Outsource Global, incredible heroine of Nigeria, Amal Hassan, that founded this, northern Nigerian woman. They have over 1,000 employees in Kaduna, in Abuja, and soon in Maiduguri that export services from Nigeria and earn FX for Nigeria. And we would like to see more of that focus because 70% of the world economy is exports. Nigerians fit into these export value chains. I mean, Amal Hassan's people serve multinational clients. They get paid in dollars. They get paid in pounds that comes into Nigeria. But of course, we're seeing it in other places too. So if we take financial services, Nigerian companies are having incredible success around Africa, so exporting financial services. So you see the expansion of UBA. You see the expansion of Access Bank. So they've just bought a bank in South Africa, for example, that shows their reach. You see companies like Flutterway, companies like InterSwitch. And then, of course, we have the export of the cultural industry. So we had 2 Grammy Award winners in music, as people know, in March. I mean, it's just fantastic. So our advice is, the diaspora is important, but we want to be able to keep the brains in Nigeria. Let's focus on the export of services. They're higher value added. I'd rather export Nollywood than try to manufacture table fans and competing against Thailand, competing against Vietnam. So that's our advice. Sorry, and on the gas issue,
yes,
absolutely correct. So I was with GMD Malam Kyari last Tuesday at that event, and he was discussing this. I mean, we're a gas country. We should think of ourselves as a gas country. I actually suggested NNPC needs to change its name. Nigeria National Petroleum Company doesn't work anymore. We need to replace the P with something else. I mean, we all know the future of oil is limited. People are looking for greener alternatives. It's hard to go off of fossil fuels completely, but by far the greenest fossil fuel is gas. We have gas in abundance. We can use it domestically to produce gas to power. We can also export it. So now that we've got the PIV passed, hopefully there'll be a lot more focus and acceleration of the gas economy. But I mean, GMD Malam Kyari is totally on top of that and absolutely agree. But really, oil. I mean, I think one way to look at oil is people realize its days are numbered. We may have reached peak oil, we may reach it in 5 years, but it's not going to rise much at this point. You were talking a bit about OPEC. The thing is, in this transition period, oil price may remain high because people aren't investing in it, and we're in a sense kind of running down the resource. So we may actually get good value for the remaining oil we have. Again, let's use that wisely as we make the transition. But 20 years from now, I hope God grants me enough life to live that long. I hope to see the world not really using much oil and Nigeria not dependent on oil.
We will be driving the electric cars by then. Well, already we have them coming in gradually. Now, moving moving on, cost-cutting measures are obviously the go-to strategies for so many economies, but it seems to be quite difficult for Nigeria to adopt this, from cost of doing business to basic service. Market sentiments and are not responding favorable to our most recent inflation figures. Yes, let's talk about that in the last quarter. Now, how do we begin to adopt price control mechanisms? Take, for example, food inflation, which is reversing its pressure, but the prices of commodities continue to skyrocket.
Well, I think we would say, and have said for some time, that let's look at the fundamentals here. I mean, let's not even talk about inflation. Let's just talk about high prices, right? Prices that people can't afford. Why do we have high prices? If we went to the Indian economy, for example, and we looked at the price of basic goods, of agricultural goods, of buying a cup of coffee, of renting a house, we would find in India, it's about the same GDP per capita overall, that the prices were much lower. Why is that? Simply the systems are more efficient. There isn't all the infrastructure barriers. There aren't all the complexities of the government. So the fact that we have such a poor infrastructure, and electricity, the roads, drives up the price of everything, and particularly the agricultural goods. So I don't want us to focus on 18% inflation, which is an absolutely terrible number. What I would like the country to focus on is, let's actually have the basic infrastructure that will allow the prices of all of these things to stabilize at a level that's actually affordable. So I don't think we as PwC or me personally would be in favor of some sort of price controls, which again, we've shown time and time again, particularly the Nigerian environment, these sort of regulatory diktats are subject to abuse. I mean, when we have the exchange rate issues, we have round tripping. When we have the fuel subsidy, we have 20 million liters a day going to countries outside of Nigeria. So trying to regulate the prices leads to other distortions. I would prefer to see the government, all three levels, but particularly the federal and state governments, focus on the fundamentals. We've talked about infrastructure for a long time. We know how to build a road. And of course, I think there's a lot of good stuff that's happening. One particularly powerful program is where the government grants the tax waiver to companies that actually build the infrastructure. And one of the reasons why this works so well is, of course, there's no diversion in it, right? I mean, the government's aware often in the government contracts that they're padded in a certain way, I think as we're all aware on the show and in this country. By having the private sector do it and giving them a tax credit, they give them the responsibility for delivering on time, and they generally do that. So I think it's innovative programs like this that are going to kind of unlock it and eventually allow prices to not just stop rising, but to fall to a level that they can be affordable for the average person, because that's what they need. But what we have right now is really intolerable, and we do need to ask ourselves, at what point does inflation become so high it becomes very difficult to manage the economy? Because at a certain level, people don't want to hold the Naira, right? I mean, if you know the value of the Naira is going to decrease next month, you want to get rid of your Naira and you want to turn it into something else. And of course, one of the things that's happening in the country is a lot of particularly young Nigerians are turning it into these digital assets or these crypto assets, so Bitcoin, Ethereum, and then ones that are less well known and really volatile. And that's not a healthy thing for the economy. But it's a symptom. It's a symptom that people don't want to hold the Naira. So if to people to want to hold the Naira, to have a strong Naira, you've got to make it attractive. And unfortunately, the inflation is really putting pressure on that dimension of economic life.
Dr. Andrew Nevin, thank you very much for spending your afternoon with us. Enjoyed your Salah break.
Thank you so much, Tolo. It's great to be with you.
All right then.